Welcome, ladies and gentlemen, to the gold update, gold market update on Commodity TV. Is this the start? We have long time saying that the gold market is manipulated, also the silver market, and that it will come to an end when the physical deliveries come true. It looks like this has started. A headline stated, JPMorgan plans $4 billion gold delivery in US amid tariff fears. Well, JPMorgan Chase & Co. will deliver gold bullion valued at more than $4 billion against futures contracts in New York in February, at a time when surging prices and the threat of import tariffs are fueling a worldwide dash to ship metal to the US. The bank, which is by far the world's biggest bullion dealer, was one of several institutions to declare plans on Thursday to deliver bullion against contracts traded on CME Group's COMEX that will expire in February. The delivery notices, which totaled 30 million troy ounces of gold, were the second largest ever in Bourse data going back to 1994. Wow, that's a real number, ladies and gentlemen. In addition come other banks like Deutsche Bank with almost $1 billion US deliveries, Morgan Stanley with $926 million, Goldman Sachs with $653 million, and BNP Paribas with $433 million, plus the rest with $1 billion US also. This makes a total on $8 billion in gold deliveries. The big question is now from where this physical gold comes. Short positions liquidating, or the banks are using another exit? We don't know exactly. Fact is that this is a remarkable point in the futures exchange history and might be the start of something large, meaning the paper game is coming to an end. Paper gold is funny to trade, but in reality it has exactly one value. And this is the heating value of the paper. The rest is nonsense. This is an extremely bullish development as large gold buyers saw the opportunity to take gold deliveries in size through the COMEX and took advantage of it. This gold won't come to the market again and will intensify the race for physical gold in a very tight gold market. We are bullish for gold and mining companies, as it looks like that the next target is $3,300 per ounce gold. The pointed figure chart has a buy signal generated, and our old price target of around $3,050, $3,100 is now erased, and $3,300 comes into the game. Longer term, we see $3,600 as the next target, and then $4,500 per ounce gold in 2027-2028. High-quality mining companies like Calibre Mining, Fortuna Mining, Skeena Gold and Silver, Osisko Gold Royalties, Sibanye-Stillwater, Sierra Madre Gold and Silver, Osisko Development, Fury Gold Mines, Gold Mining, and Gold Royalty. Let's have a technical look onto the companies. Calibre Mining is on the jump to new highs. The next price target is $3 Canadian with a breakout to $6 Canadian at $3.50. Fortuna Mining is a great gold producer, and the chart is about to start an upward reversal and ends the falling wedge. The immediate price target is $8.5 to $9 Canadian and then $11 Canadian. The Skeena Gold and Silver point and figure chart looks fantastic. Great upward trend with a first price target of $19 Canadian. Osisko Gold Royalty is the fourth largest royalty and streaming company in the world and well set up. The point and figure chart is positive with a price target of $40 Canadian for the stock, and the company pays a quarterly dividend, which also does never hurt. Sibanye-Stillwater is a large gold producer and one of the top platinum and palladium producers in the world. The point and figure chart of the ADR suffered enough, and we see a nice bottom formation and an entry point on those levels. A first price target is $5 and when the upward formation generates a buy signal at $6 then $10 is the next price target for the stock. The Sierra Madre Gold and Silver chart starts an upward turn as the 20-day moving average already crossed the 50-day average, and the 200-day average is moving upwards. We have a price target of $1 Canadian $25 for the stock in the near term. Osisko Development stock suffered really a lot, but at those levels it looks like a great entry point, and honestly I used it, I just bought today. The low price targets are reached below $2 Canadian, and this will be a reversal bottom now. First price target is $3.5 Canadian and then $6 Canadian for the stock. Fury Gold Mines is also a great gold company, and the chart is getting interesting. The stock is working on a breakout with a first price target of $1 Canadian. The gold mining stock is still trapped in the down formation. A reversal would lift the stock immediately to $2.5 Canadian. Last but not least, Gold Royalty. The company has one of the highest growth profiles for the next 5 years of the sector. The stock has crossed the 20 and the 50-day moving average upwards, which is a nice buy signal. A first price target is around the $220 level, but we think it can go easily to 3. We think gold will move the next years massively higher due to the unsolid debt policy in the USA, but also in the European Union. Inflation is not dead. Inflation came to stay and will stay. The tariffs of Mr. Trump are counterproductive because it will import inflation, which hurts the Americans through higher prices and resulting in higher inflation. Gold and also silver are the store of value and buying power preservation. Quality mining stocks, like the ones mentioned, will rise on the back of rising gold prices. Time to get it. You find all information also on our Commodity TV app in German and English, plus all about commodities. Please note the following disclaimer. The shares discussed are part of the SRC Mining Special Situation Certificate, and I'm a shareholder in the companies. Thanks for watching us, and bye-bye from Switzerland.